Good morning, everyone. This is Japanese Economic Review Channel. Today, we present the market intelligence briefing for yesterday, August 12, 2026. This session highlighted a fascinating divergence, where Japanese equities demonstrated remarkable resilience, completely decoupling from a declining U.S. market. Today, we will examine the global macro drivers, domestic sector rotations, and key corporate announcements that shaped yesterday's trading. Let's begin with the U.S. market sell-off. Looking back at the U.S. market on August 11th, both the Dow and Nasdaq continued their decline. The primary catalyst was escalating geopolitical tension in the Middle East. An Iranian official's warning regarding the Strait of Hormuz drove crude oil prices higher for a fourth consecutive day. This reignited fears of sticky inflation and high interest rates, leading to a direct sell-off in major tech and industrial giants like Alphabet, Amazon, and Honeywell. In contrast, yesterday's Japanese market staged a stellar rally. The Nikkei 225 surged 553 yen, reclaiming the 67,000 mark for the first time since mid-July. Meanwhile, the TOPIX gained 38 points, marking its sixth consecutive winning day and setting a new one-month high. Although morning trade saw resistance from profit-taking, a strong afternoon surge in semiconductor stocks, aided by a stable yen at around 159.30, powered the markets to their daily highs. Yesterday's market breadth confirms that the rally was broad-based and highly liquid. On the TSE Prime market, advancing stocks outnumbered decliners by 983 to 530. More importantly, total trading value reached an astonishing 9.44 trillion yen, with over 2.5 billion shares traded. This extraordinary level of transaction volume signals a massive influx of institutional and international capital, confirming strong conviction in Japanese equities. Sector analysis shows active rotation. 21 out of 33 sectors rose, led by non-ferrous metals due to surging AI data center power grid demands. Financials and mining also surged on interest rate expectations and high oil prices. Conversely, 12 sectors declined, including retail and real estate. Interestingly, consumer-heavy stocks like Matsuya and Senryo faced pressure, suggesting capital moving out of domestic consumption into large-cap growth. In the emerging growth market, selective investing was highly prominent. Advanced technology companies led the gainers, with subscription enabler B-Plats, image recognition AI firm feature, and autonomous driving OS developer Tier 4 leading the pack. Meanwhile, marketing and software-related names like Toradori and Lakil faced profit-taking. This underscores that investors are strictly focusing on high-conviction innovation with strong technical barriers. Yesterday brought significant corporate announcements. In healthcare, Marudai Foods secured a breakthrough approval for a narcolepsy treatment. In digital transformation, Mirai Works won a regional contract, and Issei Katsu upgraded its real estate app. Most notably, in ESG and partnerships, Denso co-authored a white paper on EV battery passports, Toyo Seikan began plastic recycling trials, and Yamada Denki partnered with Sukui to develop senior home remodeling. To synthesize, yesterday's market action clearly illustrated the global divergence. While U.S. markets suffered from Middle Eastern geopolitical friction and oil-driven inflation fears, Japanese equities capitalized on a supportive currency environment, yen stability at 159.30, and a powerful afternoon semiconductor surge. Ultimately, Japanese companies are successfully turning global macro headwinds into opportunities while driving domestic innovation. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.